at Jupiter Wagons, joining in with Sudipta Mukherjee, Managing Director at Texmaco Rail, and Mr. Lalit Kumar Khaitan, ED and CFO at RK Forgings. This is going to be an interesting budget as well, because it is kind of vote on account and an interim budget, but what happens from here on, being an election year, and the kind of outlay that we've seen in the last year, what does it translate into from here on? That's what is going to be absolutely crucial. In fact, first let me head across to Vivek to get his views. Vivek, overall, if you see in terms of the current year and the kind of allocations that we've already seen in terms of FY24, the outlay has been absolutely a strong number. What is the expectation that you have, firstly, from a number perspective?
Okay. Yeah. Thank you. So as you rightly said, in terms of the outlay and the actual spend which we are seeing from the railways, we have nothing to complain. And what we are seeing is that the thrust on infrastructure, especially on railway side, because it was this thrust was missing for a long time, and railway is going to be the key driver when it comes to the lowering the infrastructure costs and on getting India to the next level in terms of GDP and the goal of the government for the $10 trillion economy. I think going forward, we expect the momentum to continue. As outside of the budget, already you have seen a lot of announcements by the Honorable Minister himself and the Honorable Prime Minister, where they have clearly earmarked the road ahead. They are talking about more than 1 lakh crore investments in new rolling stock. There is a renewed thrust on further augmenting the railway track infrastructure. The DFCC is going to get fully commissioned shortly. The ministers already clearly mentioned the roadmap for further DFCCs to come up. There is a coordinated policy decision on development of and modernization of the various railway stations, along with thrust on a lot of private infrastructure in terms of sidings and as well as private terminals. So overall, I think it is not only when you look at railways, it's a very, very comprehensive strategy under which the railway ministry is working. And it is both, if you look at the freight side of the business as well as the passenger sides, including the passenger amenities, I think you will see a renewed momentum on all fronts.
Absolutely. A lot of areas where the government is working on it as well. So to you as well, if you have to look at the various projects which are underway right now, you have the USBRL, you have the bullet train, you're talking about redevelopment of railway stations, conversions of the narrow gauge to the broad gauge, purchase of new trains that is coming to the tune of almost 1 lakh crores. How is it that you as a company are looking to participate, and any newer segments you think as a company you would want to enter again in the same sector?
Yeah, so if you look at Jupiter and if you look at a portfolio, we are pretty broad based. So, whatever investments which you have talked about railways putting up in infrastructure. So if you look at specifically the rolling stock, we are pretty much there in most of the sectors. So going forward, our focus is to continue to be in the rolling stock segment, but become a much more integrated player. So bring in much newer technology. So we are introducing now the brake systems. We are thinking now we are going to be foraying into the metro segment. So our focus is going to be to continue to be in the segment which we are bringing newer technologies and become much more integrated and add more value into the segment. So that is going to be our focus going forward as a company.
Right, so that's what business is looking like overall for RK Forgings as well. Clearly, Vivek, we are seeing the way you want to increase capacity as well to meet this growing demand. Order book absolutely remains robust for you. I think last when we spoke as well, you were clearly indicating that a visibility of almost 18 months is what you're sitting on in terms of execution. How is that expected to change with the allocations increase? How are you going to meet the capacities?
Yeah, so as you rightly mentioned, our focus going forward is on capacity. So we have been very clear that by the end of this year, we are looking to produce about 1,000 wagons per month. We have a very robust capex outlay. Over the next 2 years, we are going to be spending more than 1,000 crores on our capex, which includes expansion of our foundry, which again goes towards the backward integration, which we are talking about. We are looking at wheel set manufacturing, and that will not only cater to the Indian demand, but for the especially for the European markets, as we have very strong presence through our partnerships in Europe. Uh, the whole idea is, going forward, Indian Railway itself, we are seeing a further demand for at least between 30 to 40,000 new freight wagons. The private sector demand is it's very robust. There is a lot of investments, private capital for the first time after a long period happening across all sectors, be it steel, cement, power. So that in turn will again create additional demand going forward. So definitely on the demand side, we don't see any challenge. So our whole thrust right now is on capacity building.
Right, so capacity expansion is what is on the cards as we speak. To you as well, any tax benefits, PLI scheme extensions, what is it that you think as a company that you need to grow? Because, the industry with regards to railways, I think I was just looking at the end of December 23, all railway stocks have been multi-baggers, from a stock price performance perspective. Investors have been really happy as well. So what is it that you think that the government should be doing so that this process continues?
Yeah, so I think that in terms of investments, there are no complaints, and we believe that the investment is the government investment on infrastructure will continue. I think the key is on the execution piece because going forward, I think the way the economy is shaping up and across in terms, say, if you look at freight or the passenger business, you see more and more demand coming up. So I think it's very important that the infrastructure has to keep pace. If the infrastructure is going to keep pace, I don't see a reason why demand is not going to come in. So I think the key would be on the execution. I think that's where the real focus should be. Definitely, PLI is something because this is a sector. This is one of the few sectors which has not been covered under the PLI scheme, and especially now with the thrust which we are putting on in terms of modern technology on India being the export base to the global market. That is becoming more and more of our focus.